Hello and welcome to Need to Know, your weekly investment podcast brought to you by the experts at Coutts. I'm Sarah Muir, and to mark the launch of the latest Coutts London Prime Property Index, I'm joined by Coutts Real Estate Director Kitty O'Shea. Welcome to Need to Know, Kitty.
Thank you very much, Sarah.
Very nice to have you back on. Now, we're going to be doing a deep dive into the London prime and super prime property market. And I think there are three key areas you want to cover in today's podcast, aren't there, Kitty?
Yeah, so I want to talk about the headline messages for this quarter for the prime London property market. I want to talk about what's happening in the super prime market, and then I want to pull out some of the key trends that are happening around different areas in the capital.
Okay, well, let's kick off then with the headline messages. Prime property, we're looking at properties between 1 million and 10 million, aren't we?
Correct, yeah. And then if we talk about super prime, we talk about 10 million plus.
Yeah, okay. All right. Then. So key takeaways then of looking back on the last quarter of 2024.
Okay, yeah. So the headline message for prime London prices is that prices flatlined in Q4, so the last quarter of the year, and then we finished the year 2.9% down on 2023 prices. So over the last decade, price growth across prime London has been pretty non-existent. There has been some growth since the pandemic, but the market has really struggled to recapture the peak of 2014. On average, prices are now about 8.4% below the height of the market, which, as I mentioned, was over a decade ago now.
Yeah, and something we've touched on before is the subject of discounts. Are we seeing perhaps an increase in the number of properties being sold at a discount, or perhaps at the amount of discount at which they're being sold?
Yeah, so good news for buyers is that they've continued to negotiate at pretty big discounts. The average discount is creeping up to 8.9%. That's up from 8.6% the previous quarter. And in the last quarter alone, we saw 42% of sales have their published asking price reduced, and 76% of sales were sold at a discount. So that's basically when buyers are negotiating a discount off the original published price.
And what about sales volumes? Is there any increase in the volume of properties?
Yeah, so sales volumes increased 0.9% Q on Q, and they're actually up 31% compared to a year ago. If you compare prime London transaction volumes with the 10-year average, we found that transaction volumes are actually up 15%, which really shows the resilience of the prime London property market at the moment.
Okay, so a resilient market, more sales, but we are also seeing larger average discounts. That's the prime market, so that's the 1 to 10 million pound. But what's happening in super prime, the sort of 10 million plus? Now, I guess with recent changes to the res non-dom regime and, of course, stamp duty changes on second homes, one might be forgiven for thinking that it would be a challenging environment for super prime London property. But how's that market been faring?
Yeah, well, that would be a fair assumption, but actually keeping on the theme of resilience, the super prime market has shown to be pretty resilient too. So super prime sales more than doubled in the last quarter of the year if we compared to the same period in 2023. So despite changes, as you mentioned, announced in the budget around non-doms, but also the increase in stamp duty on second homes, which, as you'd expect, many commentators predicted would negatively affect the upper end of the market, activity in super prime London has not actually been held back. The hottest areas for super prime activity in the last quarter were the usual central London locations like Notting Hill, Knightsbridge, Mayfair, but also Hampstead, which we'd, I guess, classify as outer prime.
So why do we think then, sort of despite some of the changes that are coming in from a tax point of view, why do we think we're continuing to see this activity in the super prime market?
Yeah, it's an interesting question. And I think just touching on it from a few points, but London's attractiveness to global ultra high net worth individuals has never solely been about just tax efficiency. For buyers in the super prime market, the motive is often strategic, kind of long term, but also lifestyle driven. So I guess looking at strategic from the first instance, and as you'd expect, super prime buyers generally have a long-term investment horizon, typically 10-year plus, but often it's intergenerational. And which I might add, this ought to be the case, particularly when stamp duty is currently maxing out at 19%. But tax changes, I guess, are just one consideration amongst many. And then we talk about lifestyle, and London, and this is true for the UK more generally, it has major draws for international buyers. So if you're a business owner or you're coming to the UK to work, it's a fair place to work. The judicial system, the time zone, the language, the international travel connections, it's a good place to do business. And then if you're thinking about families moving to the UK, why are they often coming here? And everybody talks about the unrivaled education system. I guess the comparative security and access to green parks and outside space and things like that. So there's lots of reasons why people live and choose to live and work here. We'll come on to it in a bit, but FX obviously plays an important component too. But I think you've got some other questions first to run
absolutely.
through.
Yeah, especially for our sort of international buyers. Okay, well, that's coming to the last point then, which is the sort of local nuances. I mean, London's often described as a city of villages, and one of the features of the Coutts London Prime Property Index is the postcode selector tool, where you can go in and look at what's happening in specific postcodes in London. So what are some of the sort of nuances that we're seeing across the different districts of London?
Sure. So one of the main themes that we've pulled out, and again, we've been saying this for quite some time now, but there is significant value in central London postcodes relative to historic prices. So, for example, prices in Chelsea, South Kensington, Mayfair, they're still about 17 to 20% below the height of the market, which is quite something, I would say, and quite interesting if you're looking in these areas.
Okay, so but I guess for some of those central London postcodes, they're of interest to international buyers too. And how is what's happening in currency markets impacting that, making it perhaps more attractive for international buyers?
Yeah, so that's exactly the point that we wanted to make, really. If you factor in the weakness in sterling against the dollar, we're finding that dollar-denominated buyers have a major buying opportunity now. The pound is down 24% on 2014, which, as I mentioned, was the height of the market. So dollar buyers in these areas like Chelsea, South Kensington and Mayfair, they're actually getting a 41 to 44% discount on prices from 2014. So really interesting buying opportunity for those buyers.
And you can see why there's that resilience in that super prime property market. Thank you very much, Kitty. I guess key takeaways for me on the report that's just been published: a surprisingly strong market for super prime property. Those are properties worth £10 million or more. We're looking back at Q4 of 2024. More properties sold in the last quarter of last year, with some significant discounts in the prime property category. Prime London districts still trading well below market highs, and certainly falling prices and weak sterling have created opportunities definitely for dollar-based buyers. And the strongest areas for super prime in London in Q4 were Kensington, Notting Hill and Holland Park. Thank you very much, Kitty, and thank you for listening. Do take a look at the latest Coutts London Prime Property Index. We'll pop a link in the podcast summary, or you can just go to coutts.com if you want to have a look at that. Until next time on Need to Know, bye for now.